Hello traders, the title of the video is how to combine volume trading and Andrew's Pitchfork tool like a pro. Alright, so we want to combine volume trading and the Andrew Pitchfork tool like a pro. Instead of using them one by one, alright, we can combine them. This is about multi-talented trading. Alright, so we are analyzing the volume bar and we are at the same time paying attention to the Pitchfork tool to determine, okay, whether the financial instrument has more chance to be bullish or bearish. Alright. So first thing first, looking at the Pitchfork tool, we need 3 points to draw the Pitchfork tool. This is the first point here, second point there, third point here. If you want to know more about Pitchfork tool trading or Andrew Pitchfork tool trading, go to www.dayprotraders.com and click on Pitchfork tool trading. I will also try to put the link in the description section for you so you may check it out, so you may understand more about how one can use the Pitchfork tool, the most neglected technical trading tool. So with the Pitchfork tool, I told traders before that the Pitchfork tool will determine the path that the price is likely to take, because it's a rising Pitchfork tool here. The first thing that is coming to our mind that if this stock, Yahoo stock, this is Yahoo stock, has a more chance to be bullish, it will stay within the boundaries of the Pitchfork tool. This is the lower part of the boundary of the Pitchfork tool. This is the upper side. So the price will stay within the boundaries of the Pitchfork tool in normal bullish progression. Now some trader may say, Joe, you just told me to buy Yahoo. No, I did not. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. Alright, so if the bullish momentum becomes very strong, the price will start riding, so to speak, the upper side of the Pitchfork tool. So we will project the width of the Pitchfork tool in the direction of the price and draw a line that is parallel, okay, to the Pitchfork tool. Alright. Alright. So if the bullish momentum becomes strong, that's what will happen. So now how do we combine the Pitchfork tool? So the Pitchfork tool is telling us that the way things stands now, there's a high chance that the stock will go up, and if it's going to go up, it will stay within the boundary of the Pitchfork tool. Now we know that before a financial instrument will go up, we must have the fuel. So we are talking about the volume for the fuel. For the speed of the price, we are talking about the momentum. But what usually takes place, a lot of traders are using more the momentum instead of the fuel, the volume bar, the trading activities, right? Stochastic, RSI, commodity channel index is all about momentum. But the volume, the trading activity is alerting us about the fuel. Do we have enough fuel to propel the price to the upside? So now that we are talking about how to combine the volume trading and the Andrew Pitchfork tool, looking at the Andrew Pitchfork tool is looking up, which means it's a rising Pitchfork tool. So if the price, okay, continue to break resistance, it will stay within the boundary of the Pitchfork tool, and if the bullish momentum becomes strong, it will go above the Pitchfork tool. Now, do we have enough fuel to go up or down? That's the question. So that we will combine the Pitchfork tool and the volume bar. Now, I'm going to draw your attention to the surge in trading volume bar, the volume spike. All right. I recorded a video that I posted, I think, at dayprotraders.com. The title of that video was Simple Stock Trading Volume Spike Tips and Tricks. Simple Stock Trading Volume Spike Tips and Tricks. Check it out. So now we have this what we call a volume spike. This is another volume spike here. A surge in trading volume above average volume. See here on my chart, I always have the moving average 50 for the volume bar. That's the blue line here. Above average, those are the spike, volume spike, alerting us that okay, people are buying or selling. Okay, now let's try to analyze the volume bar here about the fuel here. So I'm going to place a vertical line there. So this is this candlestick bar here. This one. Not the one that the line is covering, but the one next to it. So I want you to understand that that's this one here. This was what has happened here. That's where we have the surge in trading volume bar. Okay. So what has happened after that? You can see that the price went up, okay, but quickly come down. All right. So by looking at this volume bar, the first thing that will come into our mind, there was a failure of the price after it displayed a new high. So this is the new high in comparison to this one here. So we went to display a new high only to come back down. What is it telling us? It's telling us that there were orders here to sell, and the price went up to fill those orders. And once those orders were filled, now it came down. That's all we can say about this volume bar here. We'll see that probably these people, among them, were bullish traders that pushed the price first to this level, and then there were sellers here that sold it down. So look carefully. Don't stop there, all right? Because we have enough time now. You can see that now things are becoming a little bit clearer to us. Now, suppose you are thinking that this is a bearish sellers, okay? So we have more than how much? You see, more than 1.2 billion shares being transacted in 1 month. Now, as a stock trader, you can't ignore that volume spike. 1.2 billion shares being transacted at a specific price level in 1 month. Now, it's very, very interesting to know what is happening here. Now that we have the Pitchfork tool pointing up. So the Pitchfork tool is telling us probably those are buyers. Now we need to investigate more, all right? Suppose you think that those were sellers, okay? So I'm not going to talk about volume bar again today because I told you the color does not mean anything, all right? Whether it's green or red doesn't mean anything, all right? So this is the candlestick bar. So price open here, went up all the way to the level of $44, but now people sold it down a little bit, but it closed bullishly above, okay, the opening price. But it did close below the median line of that candlestick bar. The following candlestick bar was also bullish, and it continued to go up. But here were orders to sell. But looking at this volume bar here, the first thing that is coming to my mind is that it allowed the price to break a resistance. Which one? This one. This resistance here. It breaks above that resistance right there. So, personally, I believe that those are bullish traders. They bought the stock in a zone of $38. All right, in that zone. They bought it in a zone of $38, and the price went up. But as the price went up, there were more sellers that pushed the price down. Now, you need to understand what is taking place here, because now we have it. As the price went down, so if suppose those were sellers, truly sellers, okay? All right? What should have happened? If those were sellers, 1.2 billion shares being transacted, if they were sellers who sold it here, all right, and hide their footprint by pushing it up more, all right, if they were sellers, this was the low here, all right? So if they were truly bearish sellers, as the price formed a new lower low, this is the language of the price in a downtrend. This is the first new lower low after this one here. All right. What should we expect after the price displays a new lower low if those were sellers? All right. So price formed a higher high and then a lower low. Now, what we should expect if those were sellers? We should have a lower high and a lower low. Here there was a lower high, but where is our lower low in comparison to this one? There was none. So the price will help us to understand the volume bar. So though the price went down all the way here, forming the first lower low, we did not have a new lower low. Not only that, my friend, the price returned back above this high this high here, all right, in the zone of $38, the price return above that high. First, it found a resistance, come down, but now it breaks above, it's going down. So, with all the information that I'm extracting, so to speak, from the price action, it looks to me that those are buyers. So 1.2 billion shares being transacted. Among those 1.2 billion shares, it's not all buying activity. So when we are talking about the trading volume, we are talking about the sum, okay, the sum of buying and selling putting together. All right, that's what we are talking about. Anytime you see a volume bar, it's the total sum of buying and selling put together. All right, so that surge into the volume, the dominant force is bullish because of the price action here is bullish. Those are buyers. Now, sometimes when we use word like that, people will say, George, we must buy. Now, understand that those buyers can turn around and close their position, and if they close their position, the price will start coming down. Do you understand that? As long as those buyers stay put and do not close their bullish position, the price has a more chance to go up. But though we are saying that they are the dominant force here is bullish, if those buyers start selling, closing their bullish position, what will happen? The price will come back down, and you may say, Joe, you said to me that this is a bullish buyer, those are bullish traders. Why is the price going down all day long? Because they start closing their bullish position. But at this junction, analyzing the price action, all right, it's clear to me that those are the dominant force in this volume bar here are buyers. That's why the price did not form a new lower low. At this point in time, we will be giving priority to bullish signal, but only, repeat, only above the $51. You see, there's a resistance here. Remember what I said to you before. What has happened before is likely to take place. So they sold it here before in the zone of $44. Yes or no? In fact, they sold it here in 1999. They sold it here. Price went down a bit. You see here. They sold it again the same level. What's happening here? Exactly the same level they sold it. Recently, the same level they sold it. What they did here before, they sold it. Now we are here. So the first reaction will be to sell. Apology to traders. My apology to traders. All right. So the first reaction will be to sell here. That's what I'm saying to you. This stock will become truly bullish if it finds support above the level of $51 level. We're talking about Yahoo stock. So talking about how to combine, okay, the Pitchfork tool and the volume bar. The Pitchfork tool will give us the general direction of the price. Is the Pitchfork tool declining or rising? It's rising. So the first thing that is coming to our mind is the price has more chance to go up. And it has a more chance to stay within the boundary of the Pitchfork tool. So if it's becoming strong, it will go right. The price will start riding the upper half of the Pitchfork tool, but we stay within the boundary of the Pitchfork tool. And if the bullish momentum becomes very strong, it will go above the Pitchfork tool, and then we will project the Pitchfork tool in the direction of the price. Okay, so that's the information that we get about the Pitchfork tool, telling us probability that the price will go up or down. Now, we will now use the price action to analyze the volume spike. By using the price action of Yahoo stock on the monthly chart here, it becomes clear to me that the dominant force in this, the dominant market participant here, okay, are bullish traders because the price formed a low, it did not form a new lower low, and now it start breaking resistance level. But those bullish traders, if they start closing their bullish position, the price will come back down. But at this junction, as things stand, one will give priority to bullish signal above the level of $51. As always, we are looking for trading setup, and then we'll implement a different time frame trading method to trade it like a pro. I hope you have found this video also useful and will put it to use to make excellent trading decisions. Understand that the Pitchfork tool will will indicate the direction of the price, and the volume bar will provide the fuel that will push the price in that direction. So if the volume, the dominant force in the volume bar is bullish and the pitchfork tool is pointing up, we will be giving priority to bullish trading setup. All right. If the dominant force of the volume spike is bearish and the pitchfork tool is pointing down, we will be giving priority to bearish trading setup. In all cases, when we identify a trading setup, we will implement a different time frame trading method to trade it. If the signal fails, well, we are out of that trade. Looking at Yahoo stock at this point in time, one must give priority to bullish signal above the $51.50 and prior to bear signal below that level. If you have any question or suggestion, put it in the comment section, and in due course, I will be recording another video to answer your specific question. If you think this video has been useful to you, alright, please let us know by giving us the thumbs up. If you think that this is another blah blah blah, please let us know by giving us the thumbs down. If you think this is an essential tutorial that other traders may find useful, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to combine volume trading and earn your Pitchfork tool like a pro. Happy trading to you all, and speak to you soon.